Hi traders, do you know that if you get your bias wrong, everything else falls? Even if your entry is perfect, you are not losing because you are bad. You're actually losing because you're trading in the wrong direction. And this is common among traders. Here, I'll be showing you how I use direction, structure, liquidity, supply and demand to choose sniper entries. Okay, I'm Dr. Eugene, the founder of Doctor of Psychologicals and as well as DMF strategy. My personal DMF strategy is all about mastering market flow using direction, structure, liquidity, zones, which is supply and demand zones, fundamentals, and as well as candlestick pattern. And today we will be diving into the first pillar, which is directional bias. Here, I will show you how I'm able to trade with the trend rather than against the trend. Okay, like these trades here, these three trades here, 1, 2, 3, is with the help of my DMF strategy. Okay, and there are other more ones in my smaller time frame, but to keep them less, that's why I just put up this point here. And if you go to my handle, I actually posted them the day. Okay, so I don't really retain charts here because my main analysis is done on Xness, which is my broker. Okay, so let's go here, guys. This is it. When we talk about direction, okay, as the major point, which is directional bias. Okay, directional bias. When we talk about directional bias, we are talking about where the market is going, the direction the market is moving at that point in time. Okay, so if market is going up, it means the directional bias is bullish. If the market is going down, it means the directional bias at that moment is bearish. If the market is going sideways, it means the directional bias at that moment is consolidation. Okay, so this how we show you how to place trades in each of these three directional bias. Okay, how to use them to find trade opportunities before moving to smaller time frame to place your trades. Okay, because if since the popular saying is trade with the trend, that does not mean trade trend line. Trading with the trend is different from trading trend line. That's what some people don't know. So when they use trend line, they will then think they are now trading with the trend. It's just two different things. Okay, when we are trading in the direction, this in directional bias. Okay, we as a day traders, the only people that understand this directional bias very well is position traders. As for we day traders, we do take it as we get 50 pips, we log out. We get 100 pips, we log out. Then we keep on looking for new entries, which might lead to our losses. Okay, so here I will be breaking everything down so that you will know when to hold and when to stop and when to stay away from the market. Because when you know that, okay, this train you are about to enter, we move about 50 kilometer or 100 kilometer, then there is no need of you telling the train to stop you on the way or something like that. But if you are not sure of where the train is actually going or how distance it is going to move, then you will panic and then stop in the process. Okay, that is exactly what is going on. If you know that, okay, this market is actually going, this is where it's pointing, then there is no need to panic. There is no need to close your trade and look for new entry. Okay, because the more you're looking for new entry, the more you're creating emotional disaster, because this entry you are trying to place now, yes, it might be a good one or a bad one. Okay, here I will be breaking everything down. Then you will see how everything goes. But me personally, I'm a hybrid day trader or hybrid swing. Okay, I hold trades for days. I doesn't hold trade more than a week or more than 5 days. Yeah, I doesn't hold trades till weekend. I normally close my trades during weekend, like on Friday. No matter what, I normally close my trade on weekend, come again in on Sunday night, from Sunday night till 12, and so to place a new trade. And I don't trade any special session. I trade anytime I see my setup. Yeah, have that one in mind. I doesn't trade any session, like I see this in Sydney session, Tokyo session, New York session, or London session. I doesn't trade like that due to the pair I'm trading. Okay, I'm using those system because it will work for me. So now, after giving you all this information, now it left for you to use it in your own advantage. You mustn't do what I'm doing unless you are trading the same pair I'm trading. Okay, because what I'm trying to show you now work in all pairs, be it crypto, forex, and more. Because I'm actually a forex and crypto trader. I trade futures, sports, and as well as forex, and sometimes stock. Okay, but stock is less stress. Like, you only analyze, trade, and stay away. No need of going to check. Okay, unless you are just doing a short-time investment. Here now, this is what I normally do in these directional buyers. Okay, this directional buyers here that is telling you where the market is going, where if the overall picture of the market, that is directional buyers. Okay, it's telling you the overall picture of the market. I actually use daily time frame for this because I go trade for days, sometimes 4 days, 3 days, 2 days, depending on how long it takes for my TP to hit. Okay, but as for gold, okay, as for US oil, if I get a buy trade or sell trade, I can hold for days, months, and more. But this US BTC and gold, sometimes, unless if the trade is a high risk to reward trade, that's when I would consider holding for more than a week. If it is like 1:2, if it's more than 1:15, I can decide holding more than a week. But if it is less than that, I will close it within the week, which is higher 5 days or 4 days or something thereabout. Okay, here now in directional buyers, whenever we talk about directional buyers, I'm doing this video for my mentees and as well as public, anyone that may concern. Okay, because I know many people get this wrong, actually. So here now, this is it. Two things I need in this daily time frame here is, one, I want to know the protected high. Two things I'll be looking at here is my protected high, protected highs and lows. Okay, here, only thing I need here is my protected highs and lows in this daily time frame and overall picture of the market. Okay, for instance now, my 4-hour time frame might be telling me buy, 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 whereas my daily time frame is already is price the price is already very close to my daily protected high. At least I will then have to slow down and watch out, because what this daily time frame is telling me will be stronger than the information is stronger than the information I'm getting from 4 hour time frame. Okay, so what is protected high and lows? Protected highs is those high that lead to the break of structure or market structure shift. Whereas protected low is those low that lead to the break of structure or market structure shift. Okay, like this now, this is my protected low here. This is the protected low. This place is only protected low because this is the point that lead to this break of structure at this point. Okay, this point now is my protected high. This point is a protected high. This point is my protected low. Okay, this is the point that break of structure happen. Now that markets have already break structure here, it means this place is protected. So anytime markets get to this point, maybe by this means, do something like this, mistakenly break this particular low here, it means there is a shift in market structure at this point. Okay, here is not a protected high, a protected low, because there is no break of structure here yet. There's supposed to be a break of structure at this end for here to be a protected low. But this is the current protected low because this is the one that lead to this break of structure. And after this is a consolidation market. There is no protected high or low at this end here. Rather, it's a consolidation market. Okay, so but immediately here get got broken now. Here will be a protected. Here now is now broken. It will be a market structure shift. Which, if this market break this point now, the next point you'll be looking is here. Market have to get to this point now before any other move will happen, either to the upside or to the downside. Okay, so now the importance of this protected high and low is to tell you what is actually going on in the market currently. Okay, if you go to 4 hour time frame, this gold is actually bullish. Gold is bullish, yes, but it is not consolidating at that point. It's still trending. Sorry, it's still trending. Okay, it's still trending up. The structure here is different from the structure in 4 hour time frame. That is what I'm trying to explain. So let me remove this, guys. Here now is the protected low. Protected low here. Here is a protected high, which is the upside. Here is a protected high. So I'm trying to explain this the way I can so that it will be more understandable to you guys. So this is the protected high, this is the protected low. And here now is the low that lead to this pullback here. This is the high that lead to this pullback here. So by leading to this pullback here, it means this point is protected until it got broken. When it got broken, this is what we call break or structure. is when the protected high or protected low is broken. That is what we call break of structure. Okay, so it's not every break that is regarded, unless if you want to just trade, place your trade. It's not all break of structure is regarded. It's only the one that break the protected highs and lows. Those are the ones we regard as a break of structure. Okay, like what happened here and here. This is a break of structure. If market break this point, it's a break of structure. Okay, here will be a market structure shift. Here will be a break of structure. Okay, so that is it. It's those highs and lows that lead to the break that got broken or lead to the pullback. Something like this. We have something like this. Pullback, higher high, something like this. This point now is a protected low. This point is a protected low. Let me use this rectangular ray. This is a protected low here. This is a protected high here. Okay, if you watch closely, this is the strategy that formed that worked at this point. Okay, and there is logic behind it. Okay, so now this is the protected low, this is a protected high, and here is the point the market broke the structure to the upside. After that, this is the inducement, which is the first value pullback market makes after the break of structure or market structure shift, which is this point here. Yes, this point here now is something like this. This particular level here that I marked is something like this. It's liquidity inducement. Okay, it's inducement. This point is the inducement. Sorry for doing this in my daily time frame. I will still go down to the smaller time frame, but I want to finish everything up in daily time frame before moving to 4 hour, 1 hour, and 15 minutes. Reason is, this is how the best way to approach the market. If you are a swing trader, I'm doing this because a lot of people here are day traders. Okay, so if you're a swing trader, just replicate the same thing in monthly and or weekly time frame. You don't even need a monthly time frame, or else unless you are a position trader. Okay, unless you're a position trader. Me myself, I swing most times, and this is this time frame I'm using. This is actually the time frame I'm using. I don't need that weekly. I need weekly time frame sometimes, but just to view it and zoom out. Okay, I don't need monthly time frame since I trade every week. And for one candle to form, someone that need that day monthly time frame is someone that is trading maybe once or twice in a year, or 3 or 4 times in a year. That's the person that need that monthly time frame to be getting information. Okay, for instance, now all this candle here, from here now to here, might be a 1 month candle or 2 month candle, which the information I'll be getting from it is very tiny. It's just a small information, which might not give me what I want. So that's why I always start with daily, 4 hour. 1 hour is just confirmation of information I got from 4 hour, then 15 minutes for my interest. Okay, so this setup here that happened here is actually this. This is the pullback. This is the first push up, which is higher high, higher low. This higher low now here indicates that this point is a protected high and this one is the protected low. Okay, by the time this protected high got broken, it is then called break of structure. And remember, by the time the market is pushing up, a lot of traders will be busy trying to short the market from here. a lot of people will be trying to shut the market down, and the market broke the structure from here and go up. Okay, so as that happened, a lot of people have already lose money here because this point is actually a supply zone. It's 100% supply zone. Okay, so anybody that plays trade here is not wrong. That's why I said if you are losing not because you are wrong, you're actually losing because you're trading in the wrong direction. Okay, that person that choose this point as a supply zone is not wrong. Only that he didn't understand the flow of the market. Okay, so as this point got broken now, it become supply demand. Some people call it breaker block, but as for me, according to my DMF system, I call it supply demand. That is a supply zone that got broken. It become a demand zone. Okay, it become the current demand zone. As far as it is not mitigated, as far as it's the point that the break of structure happen. Okay, so now this point is broken, and this is the inducement here. And remember, this inducement didn't actually get to this point, because if it did, this point now would have been here. Okay, if this first valid pullback that push down here after this break of structure mistakenly get to this supply demand, then this point will become invalid automatically. Then here will be the point to place a trade. You'll be looking to place your trade at this second point, which is your demand zone. Okay, but for the fact that this point is not mitigated, the market didn't get to this point, which is this level, which is here, didn't get to this particular level here. That is why this point is still valid to be used as your entry. Okay, so now as this happened, this image is explaining everything that happened at this level here to you. This image is exactly what happened here. So now a lot of people will be here waiting to place their trades at this point here. This point, yes. That person that is waiting to place trade here is not also wrong. That person is correct, he's right. But there are some things he lacks some information about the market flow. Okay? He lacks some information about how the market flows. So the person will still be busy waiting for market here. So if that person is waiting here, that is not a problem. The only problem with that person waiting here is only if he won't be tempted to place trade at this point. When he realized that, okay, the market have already moved without him or her, if that person will be able to hold himself and wait for that market to go without trying to place trade in where there is no entry, that person is good. Okay, so that is where psychology plays. That is the role of psychology, because not even trying to waiting for trade here is the problem. The problem is after waiting for trade here and market didn't get to this point, will you sit firm and watch that market to go to that place you are looking at without placing that trade at this level, at this point or this point or any point at all to fit in? Okay, that is it. So if you can miss this trade, there is no problem. But the only problem is only if you can wait for another good setup rather than jumping into the market. That is where psychology is very important. That is the work of doctor of psychologicals. Okay, so now this person is here waiting, and this is the entry point. And this setup is very pure for you to place a trade and make a good risk to reward trade. And you can see here, the market gets to this particular zone here, show a form of reversal before coming back to trigger my point of interest and then move to my TP. I placed the same trade here and this one here. So in 4-hour time frame, you will see it more clearer and then understand what makes me place those trades and how I'm able to find my setup in those trades. So here now, what you need in this directional bias in this daily time frame is to mark your protected highs and your protected lows. Okay, to mark your protected highs and your protected lows. And another thing now is, after marking your protected highs and protected lows, now where is the market going currently, which is uptrend? This trend line here can as well tell you that the market is in an uptrend. Okay, and one thing you have to know is this week here is a candle closure in the other lower time frame. That is why a higher time frame is very important, because the information this week, particular week candles here will be giving you might not be what you expect. Okay, might not be what you expect. That's why the higher time frame will convince you to place or act in the right direction of the market. Okay, so now I've already shown you the work of daily time frame. And if you are using your 4-hour time frame for this, then what you need to do here is mark your protected highs and lows and your trend. This trend is just to know where the market is going. Okay, and here now I do delete everything, but because of this is a video, I just let it be, because as for me, all I need is to see, okay, this is a break of structure, this is a protected low, this is inducement, which didn't get to this point here. This is my zone that will definitely get triggered. And after this point here, I will still wait for confirmation, which is candlestick confirmation at this my zone to validate it. Okay, so that is actually how to trade step by step. You've already gathered everything. This thing now, you don't need to be drawing. I don't need to be drawing support here, support here, resistance here, support here, resistance here. I don't need to be drawing support and resistance. This is my support, this is my resistance. And the current support and resistance is what I pay attention to. Okay, now that this point have been broken, this point now is the, and my eyes is still here. My eye is still in this protected low, because this is the current protected low here. After this, the market haven't break above this point until market close above this level here before it will be a new protected high. This point will then be a new protected high, whereas here is the protected low. Okay, here every work of this place is already finished. If market get back to this level here, I'm not placing any trade. I mean, if market get back here now, do something like this: pull back, pull back, push up, pull back, push up, pull back to this point, and show a sign of reversal. Even if the market is here, I'm not buying, because this market will definitely draw back to this point to mitigate this particular level here before pushing to the main direction. And if this market gets here and mistakenly close below this point, it means the market will definitely reach to this particular point here. As simple as that. Okay, so let me remove this, guys. So now that you've already know what you are looking for in your daily time frame and you have already seen it, okay, even this now, after marking, since this is still in an uptrend, all you will be doing is to find a buying continuation in a smaller time frame, which is the information you get from your 4-hour downwards. So watch here now. Why this market is coming down, it never break this point. Why? Because this point here now actually leads to a break of structure at this end. Okay, this point now lead to an internal break of structure at this end. That's why this candle never break here. If this candle mistakenly close below this point, this push up here wouldn't have happened. It's because this point lead to this internal break of structure here. That is why this one is like that. Okay, so that is it. Here is internal break of structure. That is why the market respected it. Instead of the market to break this point, it just tap to the final tip, the same as this, and then pull back. Okay, so now let's go to 4 hour time frame. Yes, this is my current trade on gold. This is my current trend. I closed it on, it just hit my TP yesterday, being Friday. The last candle hit my TP, and after that it draw down small, which is I'm already out before everything. And you can see here the overall direction is bullish, and this is the protected high, protected low, and this is the protected high, the same protected high we saw in daily time frame, and the trend line as well, you can see. So now what you need to pay attention here now is, okay, since this is the protected low and this is the protected high, and after this protected high, the next thing here is the market never break this point to find, so that this point will be a break of structure. Here is also a protected high. This point now, immediately this point is broken, it's no more a protected, it's now a weak high. It's not a weak high, which is higher high. Okay, this point now is now a weak high, and this one is the protected high. This is the point that have been leading to all this pull down here. So when this point got broken now, this point will never be a protected high again. But this point currently is a protected high, and this point is a protected low. Okay, so now that all this is happening, this is all you need now in 4 hour time frame as a day trader. Yes. So now this is it. Here is your break of structure at this point. Remember, the first trade happened here. I want to zoom it so that you guys can see it clearly. I didn't place this trade because this market get to this zone here, which is supply demand zone here. Okay, I didn't actually place this particular trade here because the market get to the demand zone, because it can get to this demand zone, still going down to this one. But I placed this trade because, sorry, I will call you back. I will call you. I still told you I'm doing video. I'll call you back. So, sorry guys. So now I didn't place this trade because there is a zone here, which is supply demand zone. I placed this trade because this market get to this point and show me a sign of buyers in the market. Okay, it let me know that, okay, the buyers have come. Oh, you have to join them. As simple as that. Okay, so now when the market gets here now, this is a bullish engulfing candle in this my zone. Have you seen the candlestick confirmation that I'm talking about in my DMF system? We have seen how everything is working together, the direction, the break of structure, the candlestick confirmation, and the zone, and as well as the liquidity. Everything is working together. Okay, so fundamental is what you check before the news every day. Every day, I will check my fundamentals. If the news is 12:30 or 1:30, pending the time, I will just check and calculate. We'll talk about that one day and different day, how to calculate the stock price and know what is going to happen immediately the news is released. Yeah, but that one you need to know the news need to be released before you get the information. You can't get the information unless the news is released for you to know the price, the amount of the news, then you subtract it to the stock price, then know the result from it. Okay, so in a special day, I will tell you how to trade news because some people say they don't trade during the news, which is very wrong to say because news happen all the time. You can't say you doesn't trade news because low impact news is also news, and most of them lead to all this high move here. You see here, all this high move, almost of all this low impact news can lead to all this move here. So all of them are also news. But today we are not actually talking about news. So in the special day, we will trade that one personally. For those that might feel concerned about it. And if you have any topic you want us to talk about, you can actually comment it in this post so that I will have it in the next video. So now this is it. This point now lead to the pull up here. And immediately this pull up happened here, I've already know that yes, this market is going to pull to my point and start moving. And by doing that, this is my new zone here. This is my new zone here. This is my new zone here. This market, this is where I placed this trade. Honestly, I didn't place this trade here. Though the trade was placed in 15 minutes time frame, which I think my entry was somewhere around here. Yes. The beginning of this bullish candle was my entry. Yeah, not here. But this is where I normally target. But I have seen about 4 of my strategies. So I don't need to look for something else again. Direction is there, structure is there, liquidity is there, zone is there, 4 and candlestick confirmation is as well there. 5 of them is enough to tell me to enter. Okay, so that is it. I just placed this trade somewhere around here. When we go to 15 minutes, we will see it better. I will show you the entry point. And also, my trade was placed in this, in my broker, which is Excellence Broker, which is way different from how the price appear here. Okay, I wish I could scroll to this broker, then you will see it better. The entry was somewhere around the tip of this first bullish candle here. Okay, and my take profit is somewhere around here. Yes, somewhere around here. Yes. So now I've already said all I see that made me to place this trade. After that, seeing the directional bias, when market gets to this point and give me the strategy I use, which is direction, which is break of structure, liquidity, zones, candlestick confirmation. So I don't need to look for something else. The break of structure is something that happened at this point. The break of structure happened here. This is the inducement inside here. Sorry. This is the inducement here. This thing is covering it. Okay, something like this. Use this to see. This is the inducement here. and this is the entry point, and the market started moving. Okay, so after that, after here, market push up here, pull back here. Immediately this pullback happened here, I've already seen that yes, this is a double breakout structure at this point, which is first breakout structure, second breakout structure, and still in the same direction as seen in daily time frame, which is overall time frame. So now, since this is there, this is there, this is another setup here. Okay, this is another setup, which is the same supply demand. Okay, and in the day of how to choose both whether supply demand and demand supply, or supply zone or demand zone, we then give you the rules. It's about 6 rules I use in choosing the points of interest, which is supply and demand zone. Okay, I will then give out the 6 rules I follow. And the 6 rules, one is it must lead to breakout structure or market structure shift, which is this point is the breakout structure, which is double breakout structure even. 2, it must be the zone that is closest to my inducement, which is my liquidity. Here is my liquidity here. And this point is the one closest to my liquidity. Okay? This point is the one closest to my inducement, which is my liquidity level. I also have liquidity sweep, but that one, I think we need to treat them one very deep each time. But I need to be pointing them so that if I forget to talk about, just comment it in the post and I will make a new video about them. So this is the inducement, and this inducement is very close to this point, which is supply demand as well. Remember, the first trade was on supply demand, the second one was as well as supply demand. That is why I placed this trade here. Okay, that's why I placed this particular trade here. This is the point I placed the trade, still to this point here. I place this trade still to the major point here, which is this level. In the next video, I think I will use XNet so that you will see the actual points I placed the trades and more of the trades I took in 15 minutes time frame, because sometimes I do take some other trades like here. When this market is going down, I might feel bored or like I feel like taking some trades. But before I take those trades, I will calculate my loss, calculate everything, not emotional, but logic trades. Okay, so there's another trade here. So another one is here. There is one here, and there is one here, which is the current one. Okay, so now that this is it, there is, as market gets to this point again, I didn't buy. I can't tell you I place my entry here. No, I doesn't do such entry. I can't tell you that this is my zone and I place the trade in this zone. I doesn't trade like that. I rather wait for confirmation in that zone to be able to place those trades. Okay, I'd rather wait for confirmation before placing those trades. So I place this trade after confirmation because there is a pull up here telling me that, okay, this point is going to hold. Because if this market mistakenly get to this one, weak out, and then start going up, it means those people trying to buy here will be wrong as well. Okay, I know that for me to be waiting for confirmation, it means I didn't trust my strategy 100%. But that is not the reality. The reality is when you are doing something with confidence and clarity, you will act more better and let that trade run to your TP or even to your SL without panicking. Okay, so and you will be more calculated in placing those trades because you've already seen a proof that yes, this is going to hold. And if that fails, yes, you will then be able to find out why this trade failed. Okay, so now you can see the same thing that happened here happened here. The market get to this my zone here, my supply demand zone, pull up here, come back to trigger my interest and push. The same thing here. This zone lead to double break of structure. After that, this is my inducement. This is a after this inducement, the market get here, push up, come back to my entry, trigger me in, and start going in my direction. The third one, there is one here. Okay, there is another one at this point. But this one, I actually scalped it. I didn't hold the trade for long. It's like I took the profit here. I took profit at this point. I don't want to expose the account so much. That's why I placed it. I take profit here. The trade was somewhere around here, which is, this is even the one that respected my strategy 100%. This one, I didn't place the trade manually. He respected my trade, my entry 100%. Yeah, this one respected it 100% by tapping to my pending order. But this ones, it didn't get to my pending order and it shows a sign of reversal. That's why I placed the trade manually. Likewise, this one. Okay. And this one also respected my zone, my level. That's why I placed the trade. Okay. So now this is 1, 2, 3 here. I tried to sell at this point. Is it here? Yeah. There is a point I tried to sell. Okay, not here. Here. I tried to sell at this point here. I think here. But this week here stopped me out, which is something like this. There is a breakout here. I'm supposed to wait for this market to get here, but something happened. I saw some spike in 15 minutes time frame. I thought that is going to hold because I'm anticipating the market is coming to this point or here. Okay, guys. So as I was saying, my trade here got stopped out by this week. The reason for the trade is because of this spike here, and I wasn't patient enough to confirm this setup. Okay, so by seeing this, I was okay that this setup is going to hold. Unfortunately, it failed here. And the setup is this. This is actually the point here. This is actually the point. Somewhere around here. I tried selling somewhere around here. My stop loss was so tight, and where I placed the trade is only the problem because this is it. I placed the trade here, whereas my stop loss is just here. And immediately the market take me out, it started going in my direction. So I didn't bother because I know I'm actually wrong. The overall direction is bullish and I deviated from the bullishness to bearishness. So anything I see, I have to take it. Okay. So here is one loss here. I have one loss losing trade here. And after that losing trade, I just stopped. And there is another thing you need to know about all this setup here now. Here now is it. If you put on your trend line, you will see that this is where this trend is pointing. This here is pointing here, which is if you should get this trend line here, this one will be like this. Okay. Another one is this. Another one is this. So I know a lot of people will be like, why didn't I extend my take profit to this point? But when you understand liquidity very well, we have sell side and buy side liquidity, trend line liquidity, double top, double bottom liquidity, uh, and many other type of liquidity. So when you understand such liquidity type, you will understand exactly why I put my take profit here instead of this point. Okay, because here now, this is the trade. This is the trade I'm supposed to put here as take profit here. Because this particular trade here now, this is the point that lead to this particular pullback here. But unfortunately, this market retests at this level before pushing down. And being honest, I saw this setup, but I never pay attention to it because I was like, the market is bullish. The market is bullish. I didn't want to trade against the trend. Okay, so that's why I didn't place this. I was actually online by the time of this. This was about getting to 12 or 1 o'clock a.m. that this setup get here. I was actually seeing the setup, trying to place the trade, but I wasn't convinced enough. Even when this pullback happened here, this is when I'm supposed to place the trade. So I'm just showing you this just to let you know that even this setup work in downtrend market. Okay, so this is the protected high here, and this is the pre-cost structure. Like in drawing your structure, in putting your structure here, in putting structure in this chart, this is it here. Higher high, higher low, higher high, higher low, higher high, higher low, higher high here, higher low, higher high, higher low, higher high here, higher low, higher high, higher low, higher high, sorry, lower low, lower high. From here, it become lower low, lower high. So this is where the breakout structure happens. So this is the point I'm just trying to show to you guys. All other points is invalid according to the information I want to share. Okay, so this is where the breakout structure happened. After the breakout structure that happened at this point, which is this here, this is the first valid pullback. This is the first valid pullback here after the market structure shift. This is the first valid pullback, and after this first valid pullback, this is the point. And if you look closely here, this point that market sold from, you will understand that there is a point at that particular level. There is a weak candle here telling you that this is also a supply zone. Okay, so it mustn't be in this form. It mustn't be a red candle here engulfed by bullish one before you call it a valid supply or demand zone. This is also a supply zone because this now, putting this in a smaller time frame, you will get to know that, okay, this point is actually a supply zone. Okay, this is actually a supply zone, and this supply zone got broken and it automatically become a demand. Okay, so market have to get here now. Sorry, it was a demand zone here and it got broken, automatically become a supply zone. That's why the market tapped the point, pull back, just like all these things that have been happening here. All these first pull up here. this pull up here, retest back. That's the same thing that happened at this point. So the market get here, show a sign of reversal that is trying to go down. Okay, after which, if form another inducement here before retesting this particular zone, and that's time going down. And remember, from here now to here is not less than 800 to 1000 pips. So that is it, because this is 4-hour time frame. But using this direction will help you know where you are trading. And even if you're a day trader, that make use that only take like 50 pips, 100 pips from the market, you will then know that anytime, anything you want to do, even when this buy is happening here, you will be looking for sell. Whenever there is a buy in the market, you will be looking for sell opportunity rather than buying opportunity. So that is the importance of directional buyers. If directional buyers is telling you that the market is bullish, okay, so all your focus have to shift from selling to buying, because the directional bias is bullish. Okay, so since your directional bias is bullish, any buying opportunity you see in the market, any selling opportunity you see in the market should be a buying opportunity to you. Okay, just like what happened here. When this market get to this point, a lot of people will be trying to short the market from here. We try to be buying from here, only for the market to pull back here and take them out. As market gets it, will be trying to buy again. But all this thing that is happening here is continuation to this particular sell that happened at this point. Okay, so this is it now. This is a pull, this is a break of structure. This particular candle now can serve as a break of structure. This one is inducement. This is candle that go back to the zone and market started crashing back. Likewise here, this is break of structure candle, inducement, market get to the zone here and started crashing. Another one is this. This is break of structure here. This is inducement. This is the candle that get to the zone. Okay. Instead of this particular zone, it mitigated this particular one here, which is supply demand here. You can see it very clear, which is here. So I don't want to use line and fill up this chart, but I'm sure this is the point I'm talking about. You can see the market just get here and started drawing down. So anything happening in the market, there is reason, there is logic behind it. It left for you to know the logic behind it, to be able to trade with the trend rather than against the trend. Okay, so now this is all that happened, and the reason for this is because of this shift here. It's because of the shift that happened at this level. That's why all these things happen here, and all the aim for this is for it to be able to retest to this supply demand here, and immediately market get to this supply demand. Everything that is pushing it down is done. They have completed his cycle, and the next thing is to start going up, just as it did here. Okay, so a lot of people will be rushing to place this trade here at this point. A lot of people will be rushing to place the trade at this point, or trying to buy while all this thing is happening. So the best to do is know your point in the market, know what you are looking for. And knowing it is not enough. Understand what you are looking for is also something very important. You can know something without understanding it. Okay, you can know that, okay, there is a break of structure, there is a market structure shift, there is inducement, but you don't understand it so deep that you can anticipate it in a live chart. Okay, there is there is a difference between having something like, yeah, I'm teaching you something like this now, and you can watch this video like 2 or 3 times and repeat the same lesson to someone else. Yes, it's normal and anyone can do it. But repeating that same information to someone else, explaining it to a public or group of people and let them understand what you're actually trying to explain to them, even more than the way I explained it here, okay, is common among everyone. But you can explain without understanding it so deep, okay? Because as for me now, I'm speaking from my experience. All my experience is what I'm telling you, but you might not just know it because you heard it from me, not because you experienced it. Okay, so now this is to help you to understand why all the markets move the way they move. And when you start understanding it, you understand that trading is not as hard as it is. And one other more thing is, I can get this setup here and still lose money. I can get this setup here and still lose money. It's normal. For instance, a lot of people will be trying to short the market from here. For instance, now I tried shorting the market from here. Okay, maybe my stop loss is here. If this can stop me out, that does not mean my selling is wrong. It means I'm wrong at that moment. My entry point is wrong at that point. So, and that one entry point that is wrong shouldn't spoil all my psychology or all my trading for the week or something like that. So that is why anything you are doing, you have to pay attention, respect your plan, and follow them accordingly. Okay, so now that you've already noted your directional bias that is bullish, and here I've already shown you how I'm able to cut all this move here, and this one. Actually, this one is a losing trade, and this losing trade is because this trade here, my mind is, all my bias is still bullish. That's why I didn't pay much attention here. I didn't use a better risk, a better lot size, just small lot size, and my stop loss, it was very tight. It's like 15 pips. That's why I get stopped out. Even all these stop loss points here, you do see here, is very tight. In my trade, in all my trades, I normally use 20 pips or sometimes higher, but before I use a higher pips, it must be that that particular trade is a plus setup and it have all the criteria I need to place that, and it's a very big high risk to reward trade before I will decide to increase my risk and as well as increase my reward. So here now, the 4-hour time frame is where you then check the move here. So when markets get to that your particular zone that you marked out in your 4-hour time frame, because if I should mark out any zone here, I don't want to complicate these guys. Remember, I've explained this thing several times and I want you guys to understand it better. That's why I keep repeating myself. Okay, so anytime you open your chart, be it 4-hour or daily, what you need to do is draw your trend to be able to know where the market is going. Number one. Number two, spot your protected high and protected low. Okay, you can call this swing high and swing low, protected high, protected low, anything of your choice. Okay, so anything of your choice, you can call it. You can call it support and resistance, but protected high and protected low is what will give you the main clue of what is going on there. The reason is this point is protected. market can never close below here. If it does, it does mean that the entire face of the market have changed. Okay, if market mistakenly do something like this, break close below this point, is even if you lose, not only you lose, a lot of people lose money because market did something different. Unexpected something happened in the market. So that is why it's called protected high or protected low. Okay, so by the time this market close here, is something unique that happened. Likewise here, by the time break of structure happened, yes, a lot of people will then start watching that place as their point of interest. Okay, so that is it for directional bias. And I'm sure I've explained even more than directional bias here, because I also show you how I'm able to cut all those trades. You can use this as your backtesting. All these things can serve as your backtesting plan. Because here now, I didn't actually place trade here. I was actually afraid of losing that trade because of this thing here, because of a zone here. I was expecting this zone to hold here, even though this trade is good. The trade setup was okay because the inducement is very close here. And when market gets here, it reacted, giving me a clue to enter the trade here at this level here. But I missed the trade. Okay, and I don't think there is any problem with that because I'm okay. I didn't enter emotionally or just jump into the trade because I missed the entry. So I can say it's a good setup for me. It's a win trade, even though I didn't place it and I didn't lose money. So that's how this place happened. And here is also a loss. As for this 1, 2, 3, 4 is a winning trade. And my reason of using this place as my TP instead of here is this point, this is a trend line here. And this trend line that happened here, this is the point that lead to this trend line. That's why I marked this place. So the time, this is the one I wanted to put all the way here, which actually the market will get here. But this is weekend. That's why I just decided to close the trade at this level. But this market will definitely get to this point here. You will definitely get up here. But sometimes market will come up with all this gap market and take you out without you knowing. Okay, so if like this market were able to break here within the week, because this is where I put my take profit earlier. This is where I put my take profit earlier. But unfortunately, the market didn't break this point. Okay, that's why I reduced it to here on Friday afternoon. I was expecting that the market break this point here, close above here. Then I would have increased my lock, my distance, my reward to this point. Because as soon as this place, if market close above here, it means this point is now protected. That is very hard for market to close below this point and take me out. Okay, that's why I closed the trade. Okay, so now let's go to 15 minutes. 1 hour time frame. I hardly used 1 hour time frame unless I just want to see if what I saw in 4 hour is correct, which I don't need to doubt anything I say in my 4 hour time frame because it's very good time frame for analysis. Okay, sometimes I don't used to check my 1 hour time frame. And if you watch closely, all this my entry time frame, there is candlestick confirmation here. Watch here now. This is dragonfly doji candle. Okay, this is dragonfly doji candle, or let's just say doji candle. This is a doji candle. This is indecision candle. And as market get here, this is it. As market get to this point, another candle get up and close above it. Okay. Likewise here, this one close below it. And why I actually wanted to sell here at this level. I wanted to sell here, this level, but market get here and then form another indecision candle at this level. That's why I put back my, immediately this candle close, I put back my entry at this level, and this candle tap it in and start going. Okay, because if this candle mistakenly close here, it means this one is going to hold for pullback, for downtrend. Okay, so all these are logic. We don't just act without confirmation or before the market reacts. We only wait for market to react, then we, or act, then we react, or whatsoever. Okay, so now let's go to this. You can see indecision candle here, indecision candle here, bullish engulfing candle here, bullish engulfing candle here, bullish engulfing candle here. All of them has a candlestick confirmation attached to them, telling you that everything are ready to go. Okay, so when you have your direction, when you have your direction, sorry, when you have your direction, structure, which is break of structure, market structure shift, double break of structure. Okay, sometimes the market appear with one single break of structure, sometimes double break of structure, and as well as market structure shift. So all those ones are under structure. Direction is where you mark your protected highs and protected lows, your trend, and more. Okay, this protected high and protected low is in place of all these key levels. It serves as key levels for me. And what I normally do is, as market is pushing up or down, I will keep adjusting my protected highs and protected lows, rather than filling up my chart with trend line, with a line marking out my support and resistance. I rather make use of current support level and current resistance level. Okay, you can call these protected highs and protected low as support and resistance levels. Okay, but I'm giving them these protected highs and protected lows according to this function. Okay, for your own more understanding, and their work is quite different. Here now can be a support level, but not a protected high. Here can be a support level or resistance level, but it's not a protected high or protected low. So there is difference between all these protected low, key levels, and more. So what I make use of is protected highs and protected lows, okay, which tell me where the re-break of structure happen or remarket structure happen. Okay, because that's what I'm looking for in my structure part of the strategy, my DMF strategy. Okay. My personal DMF strategy, EMF system, Dr. Eugene Market Flow, okay, which is direction. I've already tell you what I look out for in my direction. Structure, which is break of structure, double break of structure, market structure shift, and that's it. We have single and double break of structure and market structure shift. We have liquidity. Liquidity. In this liquidity, we have something called liquidity sweep and liquidity inducement. And under inducement, we have about 6 types of inducement, but the commonest one here is the first valid pullback. Okay, the one we talk about mostly, and what most people talk about almost all the time, is the first valid pullback. Okay, that's what they talk about mostly. But this thing that happened here is as a result of inducement. This thing that happened at this point is as a result of inducement. This level here. Let me remove this line. This thing that happened is as a result of inducement. It's a supply demand inducement. Okay, it's a supply demand zone inducement that happened here. Okay, because this market now, this is the point it's supposed to start buying. This is the point the market is supposed to start buying. But unfortunately, it used this supply and demand as inducement for this particular level to hold. Okay, it used this particular supply and demand, which is this demand zone, as inducement for this point to hold, which is here. You see, this is the place that hold instead of here, because the market already closed below this point before forming a little W and then push up. So there are a lot of inducement type in the market, but the one a lot of people talk about is first valid pullback. Okay, so that's it. But as I said earlier, we'll be treating them one after another. Only that I don't easily get chance to make some videos, but my mentees is kind of disturbing. Okay, they need a video for this particular setup, and I have to provide it for them as well. So inducement and liquidity sweep. Okay, another one there is zones, which is supply supply zone, and demand supply zone. Those are 4 zones I pay attention to. And those 4 zones covers everything I need in this point as my POI. Okay, which is, I mentioned, supply zone, demand zone, supply, demand, and demand supply. Okay, and you know, all this market move as a result of supply and demand. There is demand here. If there is excess demand, the supply, if there is excess demand in the market, the price of goods goes down. Okay, if there is excess demand, the price of goods goes up. Just as normal. If a particular product, a lot of people are requesting for a particular product, the price of that particular product will go up immediately. Just a simple logic. And if the number of people supplying that particular product eventually increase, it means there is excess of that particular goods, then the price of that goods will go down for the suppliers to be able to meet up with the demand people, which is the end users. Just like your normal food and other products happen. So that is just the same as this here. So now we have zones here. Another one is, sorry guys, fundamentals. In these fundamentals, we talk about CPI, NFP, and many more of them. low impact, high impact, and medium impact news. Okay, that's all we talk about in this point here. And the last one is candlestick confirmation or candlestick pattern. Candlestick pattern. In this candlestick pattern, we have the only three we have money, many of them like tweezer candle, dragonfly doji, and many more, and gravestone doji, and many more of them. But the three, I only make use of three in placing my trades. I easily see all these tweezer candle, but I hardly pay attention to them because they don't actually come back to my entry. They don't go back to my pending order after they are formed. Okay, so I hardly pay attention to them. The only one I pay much attention to is bullish, that's engulfing candle, which is bullish engulfing or bearish engulfing, and pin bar, and as well as inside bar. And if you watch closely, all these trades here happen as a result of this three candle formation. Those three candle formation are all available here. That's why I placed trade, even though all these trades are not placed in this time frame, but all those things are available here. Okay, so sorry guys. I think this video is getting too long and we need to round up, guys. So now you've already know your directional bias by marking all this. The next thing is look for your trends in 1 hour time frame, 15 minutes time frame, or any one of your choice. Okay, you can see here, in the other point, in the other 4 hour time frame, this is 15 minutes time frame, guys. In 4 hour time frame, all this candle here is like one candle, but here it gave me more room for me to enter this trade here. Okay, so because if you are seeing it in the other time frame, it will be like maybe the market have moved without him or whatever. But here now you can see it more clearer that the market still come back to this particular level that I placed the trade, which is here. Sorry guys, I'm feeling so tired. I feel like I got to end the video soon. So you can see how the market get here. All those weak candle is something like this. That's why higher time frame is very important, because if you put your focus in this smaller time frame, I would definitely start buying here, okay? And all this buying that I'm seeing here is actually a buy opportunity, but it's not going to hold for long. It's just a small push up, then it will fail and take you out. For instance, if I mistakenly bought this market here at this point or try to buy here, this one will come and take me out. Okay, and a lot of people will be like, they find a break of structure, they find inducement, they find a zone, and the market take them out. Ask yourself, where is the directional bias? Where is the bias? What's the bias of the market? Because here now, the bias is actually sell. If I catch a buy opportunity here, and the market get here, and I'm anticipating to take my profit up here, and the market didn't get to this point and then come back to take me out, I will not feel happy because this market have already given me profit. Number one. Number two, this market, there is a break of structure, there is inducement, there is a zone, and I bought, and this thing happened to me without me knowing that there are some things I miss here that is not available. That's why you have to focus more on higher time frame. Only go to lower time frame whenever you want to place your trade. Okay, that's the only way to clear some emotions. And hey, I'm doing this video. The current time here is 2 a.m. Honestly, I'm supposed to be sleeping by now, but I promised to send you a video. That's why I'm doing it. You can see I'm kind of very tired. I'm kind of tired here. Even my eye have turned red even. But there is no problem. I have to complete it. Great. Okay, this is it. I told you guys that this trade I placed here, I got stopped out. I got stopped out here. And this trade, I took this trade in this particular time frame. My take profit, my stop loss was somewhere around here. Somewhere around here. This is why I placed this trade. This is it. This is a break of structure here. I saw this break of structure. This is inducement. This is the market that tapped me in here in this zone and started going down. I would take my profit at this level while market started consolidating, but I was so greedy, expecting to take my profit at this level down here. And before the market could get down here, it already take me out before coming down. That's what happened, actually happened there. This one is a high risk to reward trade, but I closed here because this is actually the point that lead to my entry. This is the point here. You can use it, you can do it like this, but this is actually the point. That's why I closed even lower, because I thought the market will get here and start selling. Okay, so while market is moving, you know 100% that our mind will keep giving us fake information up and down. So no one is perfect when it comes to trading. By your ability to hold yourself when emotions shows up, that's what makes you a trader. Not catching up a big move. I can catch this 1, 2, 3, 4 here. The other trades I took that is not here, I actually lose another trade. Not only this, I lose another 2 trades. Not only this, but you can see my reward is very big, higher than this risk here. This one, I lose this trade here. Another trade that happened, there is another point I was pointing somewhere around this side. Okay, this is it. I lose another trade here. That trade was, this is the break of structure here. This is inducement. I saw this inducement. I was expecting this market to crash down when it get to this particular level. And unfortunately, this particular point come and sweep me out. This is where I placed the trade, guys. This is where I placed the trade, and this particular candle here stopped me out and started going in my direction. Simple as that. 1 loss, 2. Yeah, I think it's 2. Yeah, I think it's 2. 1, 2. Yeah. So that's it. And another one is the one I missed, which is this one here. The upper one here is the one I missed. I didn't place the trade. I was watching the trade forming, doing everything, but I couldn't place the trade because I wasn't all that convinced. Okay, I wasn't all that convinced. I was hoping the market will get here before any reversal will occur in the market. So those are trades I took, and you can see all my reasons of taking the trades. And zooming this very clear, you can see the candles, how the candles form before this. This is W pattern here. Okay, so I place this trade not here, not all these points, but here, somewhere around the year. This is the candle that I placed the trade. This point here, somewhere here. I placed the trade manually at this level. So that's how to find your directional bias using all this information I just showed to you guys. And all the same thing can still happen in a downtrend. As I said, that's why this place comes to place. This is a break of structure here in this 15 minutes time frame, the same as the one I showed you in 4-hour time frame. This is the pullback here. This is the point that tapped the zone. And if you watch here, you understand that this point is more closer here. It's more simple here, because here I can call here a zone. You see, I can call here a pullback, push up, pull back here, push up like this. So here is more clearer here than the 4-hour time. 4-hour time frame was just a small candle, small bullish candle like that. So that is it. The next thing here now is only consolidation markets. Oh, this is already out of the point. I think we got to do that in another class. Let me go to 1-hour time frame and see if I can get a consolidation point. Let me use a sketch to tell you guys how everything moves. Like this now. This is it. Push up, pull back, break or structure, pull back here, breaks, pull back. This before pushing up. Okay, this is one. And in this one here, as I explained earlier, we have break or structure here. In the same point, we have supply demand. Here, we have supply here. We have, inducement at this level. Inducement is at this level. Another demand zone down here. But this first one got mitigated because it's the one closest to this inducement here. Due to that fact, that's why the market gets here before moving up. Another scenario is this, where market push like this, push down, push up, push down, push up, then come back to this demand zone before pushing up. Okay, the reason now is the difference between the two is this particular point now, which is supply demand, was mitigated by this pullback here. And this pullback that mitigated it is inducement, meaning this point is now invalid to be used as your entry whenever markets come back to this point again. Rather, you will make use of this demand zone down here as your entry point, because the supply demand and the up have been mitigated by this pullback, which is inducement. Okay, so that's how it works. This is for all for uptrend. Let me know if I can draw it in my downtrend, in a downtrend market. Sorry, guys. in a downtrend, we have something like this. Okay. So this is it in a downtrend market. This is the break of structure here. After this break of structure, this is the inducement. After the break of structure, then this is the same zone the market tapped before pushing down, which is your supply, which is your demand supply. Sorry, supply demand. This one here is demand supply. This is a demand zone that turned to supply, just like support to resistance turning to resistance support. Okay, is as simple as that. Okay, this is a demand zone, and immediately it got broken, it become a supply zone automatically. That is it. This is the same thing as this here. This one is also this. Things I'm running out of time. Let me be very fast, guys. Is something like this. Don't know why this misbehaving. Let me draw it again. Okay. This particular one here is actually this particular one here is the same as this one. In a downtrend market, this is sell-off, rally, this is drop, base, drop, drop, base, rally, rally, base, drop. Okay, so that's it. One here, this is the pullback, which is inducement. This inducement mitigated this demand supply here. Then this supply zone is automatically the entry point. So all is as simple as this. Okay, and in consolidation market, this is how it moves from support to resistance, from resistance to support, from support to resistance, from resistance to support, from support to resistance, and more. So in this type of trade, all you need is mark out your buy side liquidity and your sell side liquidity. Okay. As after putting this and this, the next thing is if this particular thing happen here, market get here, let me get a new different point line. Market do something like this, push bar down, push up like this, come like this before pushing up. It means this point now, this particular point here is manipulation level. And before something like this happen, it mostly happen in a level, in a point that if this point there is an inducement, this point will be used is an inducement, whereas this one is the one that will tap your supply or demand or supply demand zone. And after tapping the supply and demand zone, by the time this point got broken, a lot of people will be trying to sell from here, and immediately it will weak them, it will close inside and take all of them out. pull back to this particular level here before pushing up. Okay, depending on the direction of the market, because every consolidation market is supported by other trending up or down trend markets. So consolidation doesn't just occur anyhow. It is a base that will either lead to rally or drop. So by the way the market was moving before the base, we then tell you where the consolidation is going. Okay, and also another way to know how the consolidation will end and where it's going is the first breakout. If that first breakout is a weak out or fake out, then know that the market will automatically move in the second side because it have already taken out the liquidity in the first side, so it will target the liquidity in the other side of the market. Okay, so I think we have to end it here. Okay, so all you need to do is like, share, comment, and also type the topic you want us to talk about in the next video. I know this is not well organized as you might expect because I'm treating market structure, treating liquidity, creating almost everything here. But this is the best way to know them because teaching you direction differently and all those ones differently is good. But all you need is to be able to understand them. And understanding them is bringing all of them together and then be able to make use of them. That is it. You don't even need to know them. You just need to understand them. And you need to know them. From knowing them, then you understand them. That is why every trader need to be backtesting every time. Even though you think you are making money from trading, you still need to be backtesting because anything can happen in the market. Any new changes, maybe fundamental or something like thereabout, can happen, and your inability to be active psychologically, then you will got broken by the market fundamental of market or anything that happened in the market. Okay, so peace and love, guys. Yeah, I think my next class will be on Wednesday, or either Wednesday or Saturday. So all you need to go home with in this video is that directional bias is not a prediction. It's a framework. Okay, it's just giving you a framework. You are not guessing if you're trading with directional bias. You are not just guessing, maybe this will happen, this will not happen. You are just trading with clarity and confidence. Okay, because using this will help you to know, okay, this is what is going on, this is what you have to do, and this is what you have not to do. Okay, and if you want more sniper entry content using this DMF strategy, just hit me up. I will guide you on how to go about it. Okay, we actually have a mentorship program going on every month. Okay, that is actually more than a month because I do attend to the mentees even more than anything. Because this particular video was requested by mentee and I have to make this video and address some points. Okay, so that's it, guys. Like, follow, and share. And thanks for watching. Peace and love.